Bitcoin hitting 100k by year-end 2023. When Bitcoin first appeared on the scene with its unique concept in 2011, nobody took it seriously. The concept of an electronic currency appeared laughable, and 10,000 Bitcoins only bought a pizza order at best in the early days, if even that. Fast forward to today, and having a few hundred Bitcoins from back then would make you a multi-millionaire. Its concept is seeing fast adoptions even by government services across the world, and alternatives are everywhere. Where is this brainchild of a mysterious inventor or inventors headed? Well, an exchange rate of 100,000 US dollars for one Bitcoin. What's behind it? What's going on? Let's find out. Standard Chartered, the world famous British banking corporation, has published a note which states that its analysis have an interesting prediction for Bitcoin. They predicted that Bitcoin's value could jump to 100,000 US dollars by the end of the year. With Standard Chartered making this prediction, you guys know that there's a real chance of that happening. Even though Bitcoin and other cryptocurrencies are famously volatile when it comes to exactly how much they can be exchanged for, we see potential for Bitcoin BTC to reach the 100,000 US dollar level by end 2024, as we believe the much touted crypto winter is finally over, wrote analysis Jeff Kendrick in a reference to the post-2021 value drop experienced by almost all major cryptocurrencies. Going on to further explain his thesis, he wrote, "The current stress in the traditional banking sector is highly conducive to BTC outperformance and validates the original premise for Bitcoin as a decentralized, trustless, and scarce digital asset." He's referring to the recent shutdowns of institutions such as the Silicon Valley Bank and the near apocalyptic degrees of stress currently being faced by Goldman Sachs. As you may know already, these events have been thoroughly shaking up the global finance sector. Such predictions could also be fueled by speculation regarding alternatives to the US dollar for global trade, as the Chinese yuan, the euro, and even gold are all being increasingly presented as alternatives. Cryptocurrency joins the club alongside traditional currencies that is chipping away at the supremacy of the US dollar. However, anyone who has spent any substantial amount of time learning about and familiarizing themselves with crypto knows that Bitcoin can be equal parts smoke and mirrors, even if it's equal parts legitimate currency. Bitcoin hovered at the $60,000 range in November 2021, and that time is remembered as a period of historic crypto bullishness. Compared to its current value, which is half that, the influx of miners reaching to grab a pie of this Bitcoin gold rush was such that it had caused a global shortage in GPU prices, leading to a lot of angry gamers. Analysis went crazy with the predictions. A Citibank analysis said in November 2020 that Bitcoin could climb as high as $318,000 by the end of 2022. Following an earth-shattering crash in that year though, it ended with $16,500 only. 2022 proved to be one of the worst years for cryptocurrencies, with the bankruptcy of crypto hedge fund FTX being the highlight crisis. Crypto heists and hacks were also widely reported, with the Ronin network hack alone witnessing a $625 million heist. All of this had a knock-on effect on the value of Bitcoin, as people rapidly lost trust in its ability to hold value safely. When it comes to influencing the path taken by an asset as volatile and valuable as Bitcoin, regulations matter almost as much as market forces, and this is part of the cause of the recent uptick in value. Jeff Kendrick referred to a recently passed legislation package from the European Parliament that introduced standards, accountability, and a sense of stability within the European cryptocurrency market, a move that obviously affects Bitcoin. He also explained that the value increase has improved the profitability of Bitcoin mining companies that started popping up every now and then during 2020 and 2021, creating a snowball effect, raising Bitcoin's price even further, as it previously previously had, with the price of BTC now well above our $15,000 estimate of direct costs. Miners are unlikely to sell many coins, Kendrick stated. As you can see, with miners selling less, they release less bitcoins into the market, helping each bitcoin gain value. It's simple economics. Less supply, higher demand. But why are cryptocurrencies so volatile? And can they still be on the path to dominate the world as so many crypto bros believe back in 2021? The answer is complex. Financial analysis and blockchain engineers will have a wide range of answers for you that would make your head spin on account of the sheer amount of technical jargon. Well, in layman's terms, the first piece of the puzzle is the fact that cryptocurrencies are not physical goods and they lack intrinsic value as of right now, since they cannot be ubiquitously exchanged for services and products. The cryptocurrency market is also relatively small compared to traditional financial markets, and this is why large buy or sell orders can have a disproportionate impact on prices. Something that Statista.net can show you was seen a lot during the mid to late 2010s. Finally, the blockchain technology, which forms the basic bread and butter of cryptocurrencies, is highly complex and has only gotten more and more complex as the years pass by and as more miners joined. It's almost like rocket science, but in the realm of computers, and issues like scalability challenges, security vulnerabilities, network congestion, and software upgrades can create uncertainty and impact investor confidence, leading to price fluctuations. Now, there are lots of powerful stakeholders around the world who would love to see Bitcoin and Ethereum to have a dominant stake in the global financial market to the point where you can buy groceries with them. Many proponents of the cashless economy concept see such cryptocurrencies as valuable drivers towards that concept, along with its encryption and security potential. However, almost all the world's governments, with the exception of El Salvador, who have made it a legal tender, hate the fact that the architecture of cryptocurrencies make the establishment of a central bank or controlling agency redundant. In fact, this is one of the primary design characteristics of Bitcoin. It was very much intended to be a store of wealth and value, independent from government control. Countries such as Bangladesh passively discouraged the use of cryptocurrencies through threatening charges under money laundering laws if used, while China, Qatar, Zimbabwe, and Saudi Arabia outright banned them. Even governments of countries where cryptocurrencies are legal are wary of them, and it's regrettably true that they have been used in large-scale money laundering and terror financing operations. This is something that is expected to haunt the reputation of cryptocurrencies everywhere, as legislatures attempt to rein Bitcoin in, with the side effect of providing stability. In the mission to achieve their cashless society, government elites also discover that a digital currency that they can have full remote control over, no matter who owns how much of it, can be a viable solution. No doubt inspired by the technology powering cryptocurrencies. This has spawned the concept of the central bank digital currency, essentially digital versions of traditional currencies, and polar opposite of the idea championed by cryptocurrencies. Perhaps inspired by US dollar coin, a cryptocurrency pegged to the US dollar, the United States Federal Reserve is actively looking into the idea, as well as financial regulatory bodies of other countries. Indeed, the Security and Exchanges Commission of the SEC is looking to rein US dollar coin in under regulations, a move that is expected to eat into the profits of cryptocurrency trading platforms. All combined, we think that Bitcoin is either going to continue in the capacity it has been for the past 3 years as a niche alternative system of payments, or come under the full control of government regulations, no longer remaining a cryptocurrency in the truest sense. Central bank digital currencies are likely to see more and more adoption in the coming years due to it being favorable to banking authorities and governments, sidelining all cryptocurrencies. But hey, that doesn't necessarily mean Bitcoin won't hit $100,000 as Standard Chartered believes. Subscribe and stay tuned for more insight on crypto and finance. Thanks for watching.